Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, March 21st, and we are one day away from the next FOMC meeting where Jerome Powell is expected to either hike 25 basis points or not hike at all, meaning a 0-point hike. Or lack thereof. So that is coming tomorrow at 2 p.m. For the interest rate decision. And just like every other FOMC that we've covered and discussed, Jerome Powell will speak. He will have his speech and Q&A 30 minutes after the interest rate decision. So, what we know and what I hope many of you understand after covering this for many, many times is that, typically volatility will immediately occur around the interest rate decision, but momentum will generally reverse or be set in during the press conference, because the interest rate decision is an immediate shock. The market immediately digests that, but what the market wants to understand is the Fed's outlook and opinion of the economy and the progress that they need to make in relation to inflation and unemployment. So the press conference is where all the juicy alpha and information comes in, due to the fact that we get the forward-looking thoughts from the Fed itself. So that will be coming. We'll obviously cover, a little bit more about what price action may look like tomorrow, because we will speak before the interest rate decision. But, just so you're aware, if you do miss the show or get distracted, immediate volatility at 2 p.m. And then the momentum will be set shortly after 2:30. So looking at the dollar, which I'm expecting to have a bit of a crazy day tomorrow. The story with the dollar right now, and we discussed this yesterday in the show with Alex, CJ, and Monty, is that the dollar should not be gaining strength if the Fed is enacting QE. Basically, the Fed's balance sheet increased $300 billion. They created a daily U.S. dollar liquidity repo across 5-6 central banks around the globe. So the dollar is easy to access right now and should not be gaining strength, anytime soon, in my opinion. Well, could we be volatile and see a green candle after a red one? Sure. But the general trajectory I would expect is bearish volatility. So not saying that we can't spike up or do a quick fake out, but the general consensus is that the dollar should grow weaker, provided the Fed is doing what they need to do to quote unquote solve the banking crisis. So in my opinion, we will see the dollar trickle lower. But we will likely still see short-term volatility. So if you get above 103.7, you can definitely make it back up into the top range. Get rejected at 103.7, which seems likely currently, and then you're trickling back down to 102.3 or 102.2. So, or around where that equal low is, which is 101 exactly. So, but I would look for 102 first. Before getting a little bit crazy. But again, none of us are really trading this asset. It's just a weather vane to help with the movement. So if this does drop, and crypto volatility is going to be volatility, but if this does start seeping lower towards 101, 100, you would probably expect risk assets to breathe some sort of sign of life. I'm not saying equities are going to go crazy. We'll discuss them. But if this is dropping lower, it's certainly a check mark in the, good for crypto category. So we'll have to see how long that lasts. We'll discuss it in a second, but lower dollar should mean, risk is getting a little bit more room to roam, at least in a bullish direction. So looking at equities, the moral of the story is, we did break above the 39.25 level yesterday. That was, where we were kind of bouncing off of when we spoke. It did coincide with the weekly VWAP. So if you are just trading off of that VWAP bounce, as soon as it reclaimed that VWAP, it was a pretty good trade, all the way up to, 2% trade. So VWAP still standing tall. Now the estimated 200 moving average is coming in on the 4 hour. So that's kind of my line in the sand for today. 39.80 is kind of my number. So if you can stay above 39.80, you can then start reattacking 40.10, maybe higher. If you get up to 40.10, definitely this is resistance and highs from March 9th. So we could sweep those and then fall back a little bit lower. And then of course, if 39.80 breaks, then you are back to 39.50, likely 39.25, which is really the top of this larger range that we were trading in before we busted out. So, if we kind of zoom out on equities, I will say, it's a pretty decent looking formation. But the one worry is, of course, this trend. And of course, this trend is bumping up on FOMC. So, I don't know who's really longing this heading into FOMC tomorrow. I think, a breakout for equities the day before, Jerome Powell is supposed to come in and probably give some doom and gloom in relation to how everything is looking seems a little unlikely. So, if you are trading this, again, 39.80 is the line in the sand. You need to stay above it. And it's pretty much obvious for this trend line as well. If we're looking at it, if we're ignoring, the 4-hour estimated 200 moving average is kind of a perfect number, but it's also, coinciding with this trend line. So if we go down to the 1 hour, we can see the bounce is occurring literally exactly on that trend line. So we are above the trend for now, and it is trying to confirm the break above the trend now. So if it confirms the break above the trend, you're probably, headed back up to this 40.10 level with ease. And then you need to break above 40.10 to head higher, else you'll get rejected. And at the very least, you will head back down to this trend, potentially deviating back into the trend. So very much something to consider there. And again, if the interest rate hike tomorrow is 25 basis points, I don't expect any bullishness. If the interest rate hike is 0 points, meaning no hike at all, then I would expect, some euphoria in the immediacy of the announcement. So right now, 39.80 line in the sand, stay above it, good things, below it, bad things. And right now I would not be longing this heading into FOMC. We'll discuss crypto looking a little bit better, but I find it hard to believe that the market is likely considering a 25 basis point hike. I think it's a 60 to 70% chance right now. I just don't want a long heading into FOMC. That's my personal opinion. Fade me if you want, but even though we're breaking above this trend, I have a feeling we'll probably deviate back into it. Prove me wrong, market. So looking at Bitcoin, I think very, very simple on the 1 hour. It's the VWAP. So we've been hovering around the VWAP pretty much since the week started. The VWAP cloud has been actually very useful in this low time frame set. Considering the VWAP cloud, the purple cloud right here, outside of the weekly VWAP, has basically been the range that we've been trading in. So, every time it broke above, it slid back in. Every time it got below, it slid back in. So, and now we're above the VWAP. So currently the line in the sand for me is like 27.9. If you can stay above the VWAP, then you have reason to believe that you can attack 28.6. If you can get above 28.6, you obviously have a lot of room to roam, as judged by this entire, gap of a range right here from when we traded back in the spring of 2022. So if you can get above 28.6, you got a lot of good things going for Bitcoin, but you got to get above 28.6 first. So above the VWAP, good things, but obviously, your resistance is going to, start getting strong as you inch up towards 28.6. And then obviously, your support for this kind of general range is 26.7. So I'm not saying everything is going to, if we immediately break this range that we're going to drop straight to 26.7, but it does seem more likely considering that's the equal low. We obviously have this high here. So this whole kind of like, area right here would obviously be of interest for any traders. And then of course, we have resistance up top and we have support right here. So, in the grand scheme of things, that's not what I wanted. I would not be shocked if this is what we see heading into FOMC tomorrow. Boom, 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 boom. And then that lines up with, that's like Thursday. So FOMC will report right around here. So this line right here. So go ahead and delete this. So if that green line is FOMC, boom, boom, boom. And then we're literally just ranging, still staying in this triangle. FOMC is there. And then Bitcoin either does this or does that based on whatever the interest rate number is. So that would be my best guess. I don't think taking any overzealous trades today is going to lead to any major value. Crypto obviously is looking a little bit stronger than equities, but in my opinion, again, why am I longing heading into FOMC when no one knows what the number is going to be? We got a banking crisis, and the market seems to think that 25 basis points is more likely, which I feel is the bearish situation. So again, not looking to long, but if we do get above 28.6 before tomorrow, probably a pretty good short opportunity. Good short opportunities have come from anything above 28.3. So, probably not a bad short opportunity if we pop back over. I mean, if we close back over, close above 28.6, I should say, I won't be shorting. But if we get, a reaction where, we're trading up here and then we immediately kind of get sent back down, I'll probably be shorting that. So something to consider. Looking at ETH, it's fascinating here because, if I would encourage everyone to look up the power of 3 in trading, or, a triple top or a triple bottom. Threes are pretty powerful. And, what's fascinating to me is we have 3 rejections at the equal highs of 1845, each with pretty strong wicks. And although, this 4 hour is still, moving higher after the close, from this pretty, doji-ish candle right here, you would expect price to probably do something like this. You've got your power of 3, you've got 1, you've got 2, and then you've got 3. And so price tried 3 times to break above 1845 and could not do it. So usually the assumption would be, we're going to move back down probably towards equal lows of 1726, or what I'm considering range lows of, about 1700. So very much something to consider if you are bearish, or, you think that tomorrow, if you are bearish or you think that we're going to get, bearish data point tomorrow in terms of FOMC, not a bad short opportunity here, especially if it does try and make its way back up to 1845 and end up with another wick. I would not be shocked if we saw another kind of 4 hour, like the one we saw on Sunday, where it's basically the same wick formation, just a larger candle body. So, moved higher, sold off immediately over 8 hours, moved higher, sold off. So, personally, I do think that ETH is looking like a pretty decent short, in my opinion. But obviously, it is doing its best to hold the 1800 number, which obviously, wick down to. So, if you wanted to short now, you would definitely target, 1780, possibly equal lows of 1725. If you wanted to be patient, maybe you can get a better short up here at 1845, or, in this kind of wicking area that we've seen. It's pretty much all the wicks are right above here. So you could consider this a type of demand zone, very similar to how we looked at DXY. Anytime price gets up into that area, it's a pretty good short opportunity, and has shown so far. So, but I would not short that if you get a strong candle close. So you want to short candles that look like this. You do not want to short candles, that the candle stuff is a little bit, the science is a little wacky, but generally the sign is dojis. If you have basically price hunts liquidity up here and immediately gets rejected, that's a doji, usually a pretty good short. So I'm going to start looking for ETH shorts around 1825. And I'll be patient for now because Bitcoin is still showing some strength. And I don't want to, even though alts have been seeping in relation to Bitcoin, I don't want to just go ahead and start shorting into general strength. So, I would look for some Bitcoin weakness above 28.3, and I'd look for some ETH weakness above 1825. And that's when I'd start attacking shorts. Else, just be patient till tomorrow, and there will be plenty of trades that present themselves during the FOMC announcement, as well as Jerome Powell's speech afterwards, and of course headed into the weekend. And then we have the Arbitrum airdrop on Thursday, which if you miss all the trades this week and only trade Arbitrum, you probably have some fantastic opportunities considering how excited the crypto community is about that airdrop. So, you know, I don't really have any beautiful trades today. I think everybody is more or less going to be in a holding pattern until tomorrow. You know, just think about it. If you had millions of dollars, are you taking major bets before one of the bigger announcements of the month? You know, so if you're not taking that risk, there probably are not too many people, you know, taking that risk as well. So think intelligently. And again, you know, saving money and keeping money is generally outperforming everybody else in the market because most people end up, you know, losing their stack. So hold on to your money, hold on to your handlebars. Tomorrow will be exciting. And I hope the analysis today was helpful for thinking about trade opportunities going into tomorrow. We'll, of course, have a show before the FOMC tomorrow. You know, hopefully prices are lower, so my short idea comes to fruition. But you know, again, I think if we get 25 basis point hike tomorrow, prices will end up lower. If we get a 0-point basis hike, prices will likely end up higher. So good luck, happy trading. Speak to everybody tomorrow.